Hey everyone, it's Don Harkins with Your Florida House Team and Your Florida Loan Team. I just want to take a second to say happy holidays to everyone and thank you for your continued support this year in Central Florida in our real estate and our mortgage lending business. We really appreciate the opportunity to work with so many of our friends and family members and neighbors here in the area. And we look forward to continuing to work with you and build that relationship and be your trusted real estate advisors throughout 2022. I know the market has seen a lot of changes over the last 24 months, and coming up around the holidays, a lot of times we're spending time with family member, friends who might not be as experienced or have as much information about the real estate market as you do or as we do. So I thought this might be a good time to share some insight into what we can expect in 2022, so that if you are somebody who's giving advice to a friend or a family member or helping somebody start off on the path to home ownership or manage a transition with the sale, you know exactly what we know as far as how the market has been performing and which direction it's heading. So we're going to look at the top 3 questions that a lot of people are asking right now and wondering about the real estate market moving forward. The first question that we're getting a lot is housing going to crash, or is the market going to crash, similar to what we saw in 2006 or 2007? And what we've seen is the rising home price appreciation is definitely allowed to continue as a result of lower interest rates, but it's primarily fueled by strong buyer demand. So a big key difference from the 2006 crash, when a lot of that was speculative or investor-based flipping home price appreciation. Today, it's really true buyer demand and low supply that's fueling that home price appreciation, which leads to more sustainable growth and reduces the likelihood of a price correction. Additionally, another reason we're not expecting the housing market to crash is lending standards are much higher today than they were in the time leading up to the housing crash. The Mortgage Bankers Association has a mortgage credit availability index that looks at basically how easy is it for a borrower to get a mortgage on a home. And while the index has ticked up slightly since 2006, when mortgage lending was at an all-time high in terms of difficulty of obtaining a new loan, it's still much lower than it was in 2005, 6, 7 leading up to the crash. So really high lending standards are continuing to stay prevalent in the market. Really strong fundamental demand fueled by buyers. And lastly, homeowners are leaving a lot of their equity in their home, or they're using that equity to pay off higher interest consumer debt. And that's a contrast to what we saw in 2006, when homeowners were actually using their homes like a credit card, taking out equity at a higher rate and using it to finance things like additional vehicle purchases, vacations, using it to add on additional consumer debt. So today we're actually seeing cash out refinances continue to fall. We're seeing home equity continue to rise. In fact, in Florida last year, over the last 12 months, on average, homes gained $46,000 in equity. But those cash out refinances are falling, meaning homeowners are leaving that equity in their home. So a few key differences that, when you look at it together, really lend themselves to us thinking that we're going to see a pretty strong and continued growth in the 2022 housing market. Another big question we're getting, especially from investors or people looking to buy a second home, are will there be a wave of foreclosures as these homes that were in forbearance start to either run out of benefits from the bank or hit a deadline as far as terms to bring them current. And one key difference from 2006 is homeowners have enough equity in their homes today to sell their home on the market. So if they place their home in forbearance, they're not able to recover, they're not able to get current on their mortgage, they can place that home on the market today, sell it, cover all their closing costs, and still walk away with probably a fair amount of equity. So very unlikely it would be very disserving for a homeowner to choose to go to foreclosure and walk away from all that equity they have in their home. Second reason we're not expecting a wave of foreclosures is there's really sufficient buyer demand to absorb any type of distressed inventory. So if someone is in forbearance and they're having a hard time catching up or making payments, or the bank doesn't want to work with them, it's likely there's an investor or a third party that's going to step in and support that homeowner, work out some type of equity partnership or shared agreement or off-market transfer of property before that actually goes through the lengthy and expensive process of foreclosure and coming on the market as a bank-owned home. And another key difference, another reason we're not expecting a big wave of foreclosures to hit the market is there were about 9.3 million households between 2006 and 2014 that went through foreclosure. It was a substantial number of homes. And when we look at forbearance, it's really just a couple 100,000 homes that we're looking at that have not come out of forbearance yet and may still be in some sort of distress scenario. So given the strong demand, large amount of equity, and the small number of homes that we're talking about, it's unlikely that we're going to see a wave of foreclosures hit the market and create either a price correction or a huge buying opportunity for investors that doesn't exist today. The third question that we're seeing a lot of people ask is the real estate market going to last through all of 2022, or do we have a couple more months and we're going to see things sort of lose steam? And it's true that mortgage rates are actually expected to rise next year. We've been supported by these low interest rates, and we're expecting to see them go from around 3.125 today, depending on your scenario. But if we look at the Optimal Blue Mortgage Market Index, that's around where a lot of buyers are locking in their interest rates today. So we're expecting to see 3 rate hikes in 2022, which will probably take rates from around 3.125 up to 3.75%, give or take maybe 1/8% next year. In addition to that, home prices are also expected to rise somewhere between 4 and 7%, depending on who you ask. So with those headwinds to continued price growth, some people are wondering, is this market going to last? Can it sustain that? But one thing that's interesting is rents are also rising. In fact, rents are rising faster than home prices. And that rising rent is actually keeping home ownership as a more affordable option and stoking buyer demand. So despite escalating prices, homes are still more affordable to buy today. In fact, they're more affordable today than they were at any time leading up to the housing crisis. When we look back at what prices were in 2005, 2006, and we look at what interest rates were at the same time, it's actually more affordable still today to buy a home than it was back then. Furthermore, 65% of sellers from a recent survey who have plans to sell in 22 are actually planning to list their homes and bring them on the market this winter. So a fresh injection of a lot of housing inventory coming online sooner is likely to keep growth a little bit more under control, give buyers more options, and keep the housing market growing at a more sustainable, even pace than what we saw during 2020 when there was really low inventory, but growing and really out of control buyer demand. So if we've learned anything over the past couple of years, it's that we can't predict the future. All we can do is project it based on what experts are saying. But most people are saying anticipate more inventory, anticipate rising interest rates, anticipate price appreciation. So a lot of more of what we're seeing, probably at a slower pace throughout 2022. As always, if you have any questions about your specific home, your specific real estate or mortgage goals, or if you'd like to dive deeper into any of the information we went over, feel free to reach us at yourfloridahousesearch.com or give me a shout at 321-377-0341. We're always happy to have a more detailed conversation about your specific scenario. Again, happy holidays. Thanks for taking the time to watch, and I hope everyone has a wonderful new year.